It's great to have you with us. We've been talking about degradation of demand coming out of COVID for a while. How dire does it look to you?
You know, we have a small window into their Peloton digital app, and this is one window into current consumer engagement that we look at. And we just look at some recent data in the US, UK, Canada, and Germany. The latest data adoption levels dipped further in the US in terms of share of downloads, declining more than 200 basis points, which was worse than December. And, you know, Peloton views its digital app a primary lead gen engine that has also been growing faster than other channels. So this is just another window into engagement with a platform that we have, and it doesn't sort of look great.
Right. I assume it's a function of gyms reopening. We got a bunch of mask mandates going by the wayside starting today. Announcements coming out from the likes of New Jersey and Delaware. I guess, and so we're not even talking about hardware yet. We're talking about engagement among those who've already bought the hardware.
Exactly. And, you know, Peloton clearly went through a period of unprecedented demand during the pandemic lockdowns when demand was outstripping supply. And there was clear misjudging of how sustainable that demand is. And of course, capital investment that followed was also based on demand projections that later on proved to be optimistic. The question is how quickly they can right-size the hardware business and really what is more normalized sort of customer acquisition cost, and whether that marketing spend is sustainable and how much that can be funded by the hardware business.
Hey, Arpine, it's Deirdre. What is the proprietary technology that Peloton has that a company might want to buy?
You know, it's interesting. I cannot speculate on M&A rumors, but I can tell you that M&A has come up. It's a topic that comes up very regularly with investors. But when you think about the value proposition of Peloton, it is really in that vertically integrated model of hardware, streaming, and content. And for any strategic fit, you have to think about what Peloton brings to the table that a strategic acquirer cannot build or cannot do better. But of course, you know, could all of this drive further consolidation? We'll have to see.
So is there proprietary technology?
You have the network effect, as I said, of that vertically integrated model that is obviously, you know, they took from ideation to creating a multi-billion-dollar company. But the question is, could a strategic acquirer do that network effect better? This is really the question.
Arpine, I wonder about sort of further Peloton business model options here. Like we're talking a lot about selling the bikes with a subscription, which has a nice margin. But what about pushing differently into selling to gyms and selling subscription packages there, or even, you know, monetizing on the app side, which might not have as big a dollar value, you know, as selling the bikes themselves, but has potential. Are there ways forward for them that look different from what we've seen in the past, but could be good for them?
Of course, you know, Peloton's rollout of corporate wellness offering and them sort of potentially driving growth through commercial channels is something that drove near-term excitement during the pandemic. But when we think about potential household penetration, whether you are targeting that household through corporate wellness, through their workplace, or you're targeting them through an ad on YouTube, all of that is still targeting the same household, which to us goes back to the same question of potential household penetration and whether there is upside to what we calculate was about something like 3% household penetration Peloton had in 2020. Of course, there's also the commercial aspect of it, as you mentioned, for example, rolling out Peloton machines at hotels, gyms, but it remains to be seen how much of that can be a driver of subscriber growth, which is what investors are really focused on.